Hello, this is Jeff Bish, president of MarketGauge.com, and welcome to another Trades and Tutorials video. So in this video, I am going to look at the ECB's bond buying, and I'm going to look at the effect that it's been having on the stock markets. And the reason that I'm going to do this is because I just did a webinar last night, and we talked about the huge opportunities that are really just staring investors right in the face right now if you just understand how to trade ETFs on foreign countries. It's as easy as trading stocks, and it's a bigger opportunity than many stocks. So before I get into it though, if you don't already know, you can see this video in HD by simply clicking on the settings button down here in the lower right of your video player and then electing HD, and then you'll have to stop and start the video again. I think you're going to want to do it. You're going to be able to see the screen much clearer, and well, I think you'll like it. Now, if you're just finding us on YouTube for the first time, make sure you check out marketgauge.com/tutorials, where you'll find videos like this and a whole lot more to help your trading. So now on with the video. This is really straightforward. So as a result of this webinar I just did last night on trading foreign ETFs, I went to look for some data on the enormity of the opportunity that's happening right now in Europe because, which is no secret, the ECB is pumping money into the system. This is exactly what the US Fed was doing for the past, I don't know, 4 or 5 years, that many people directly attributed to the inflation of assets, namely stocks. Now, interestingly, as much as I don't want to blame the entire rise on stocks by financial engineering by the Fed, certainly it has had an effect. And what I'm going to show you in a second is that now that Europe is finally coming around to the fact that this was a good idea if you want to stimulate your asset prices. Not so sure about your economy, but your asset prices, we can debate whether or not this is going to end well at another time. We talk about that in the webinar too. That's not the issue here. The issue here is if you want to make money trading a trend, this is a trend you should be following. And so what is that trend? Well, the article that I found in the Wall Street Journal made it really just painfully clear, and I had to make a video about it. The truth is that this article actually came out in the middle of January of this year, 2015. And the interesting thing, the thing that really caught my attention, was what this article did was it broke down where it's likely that the ECB is going to spend the $60 billion a month stimulating the European economy. So they're going to do it, as you can read in the text here, based basically on the size of the different countries. So here's what you need to focus on. This column right here is essentially the size of the money or bond buying that's going to go into each of these countries. So I thought, oh, that's interesting. Why don't I take each of these countries, so Germany, France, Italy, Spain, Netherlands, Belgium. I didn't put Greece on because there really wasn't a lot there. I put Austria on because it seemed to pick up a little. And I thought this was basically the bulk of the money. So how has that really affected the markets since January? And it's, well, I guess it should have been obvious, but it is definitely still very interesting. So who would like to guess what the white line is here? All right, if you guessed that that's the S&P 500, the US, you are absolutely right. The one in the basement, the one that has gone virtually nowhere all year long, which is at the same time frame that the US has unwound its quantitative easing. Now, don't get me wrong, I'm not arguing that we should be back on quantitative easing. My point here is that without that boost, the markets have just languished. Now, the other European countries are all right here in these colors. So you can see the colored ones have ranged from an 8% to a 13, almost 14% return, while our SPYs have not been able to crack 2%. Well, that's not true. They've been over 2% at some point, but for all intents and purposes, that's basically where they've been all year when they were up at all. So whether you like it or not, the ECB, which is just beginning its bond buying program, according to this article and according to the media in general, they're looking at doing this through 2015 into well into 2016. And if our Fed is any example, we did QE1, QE2, QE3. It just kept coming. They're now on basically on QE1. So if you get my point, there's a lot of opportunity just following where the money's flowing. Now, in the webinar, we say basically the same thing, follow the money. Now, what we teach in the webinar is that you don't need to know what's going on. You don't need the size of this chart. There's some really simple ways to figure out where money's flowing and which countries are going to benefit from it, and exactly which ones you should be focused on without having to do all this macro research. But like I said, when I saw that the macro research really correlated so nicely with exactly what we're doing, I just thought I should share it with you. So one last point, what are the red lines, the two bigger lines that are on the chart here? These right here. Well, these are two other countries that also have financial easing and even structural changes that are driving the market. The top one is the FXI, that's China, and the lower highest one is Japan. All right, so while they may not be in Europe's camp in terms of getting Europe's money, they're pumping their own money into their systems, and it's having an effect. And the FXI here, only up about 18%, is one of the worst performing of the Chinese indexes that have just absolutely rocketed this year. So if you're not looking at international ETFs, they're as easy to trade as stocks. You're missing out on a huge opportunity, and a huge opportunity which may just be beginning. That's it for this video. Depending on when you see this video, you may see a link to the recent webinar underneath it. May even include a link to the article that I'm pointing out here. Look under the video for that. And of course, as always, leave me a comment if you like the video. Bye for now.